Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far 11 problems I have completed on financial statement of a manufacturer. In this video 12th and 13th, two more problems I'm going to complete in this video. So if you are interested in getting the complete command, watch the video till the end. Don't skip in between and always keep a notebook, calculator, pen ready. Because when I give the lecture, a number of points I'll explain. So immediately you should write it down. Then only you can be able to remember. Otherwise you'll forget it. So before starting the 12th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep ready the problem. Take the screenshot of the solutions of 12th and 13th problem. Then I'll explain all the points in detail. Now, see the 12th problem. The following information was extracted from the books of Ajit Manufacturing on 31st March 2014. 1/4/2013, 31st March 2014. The beginning of the year 1st April 13 and end of the year 31st March 14. Inventories are given: raw material, WIP, finished goods. So we are given the inventory beginning of the year and end of the year, all the three types of inventories. For the year ended 31st March 2014, purchase of raw material 1,34,000, carriage inward 1,000. Then factory wages direct and indirect. Explain the differences between direct and indirect factory wages and calculate the prime cost. The two questions are asked. The first question, what is the difference between direct wages and indirect wages? See here, direct wages are the wages which are paid for converting the raw material into finished goods. And indirect wages are those wages which are not directly incurred in production, but indirectly it is incurred in the factory. So here the difference is, direct wages is the term used to describe the cost of wages of the people who are employed in the factory making the goods. That means the wages to those workers who are directly engaged in the production of goods. Those wages are called direct wages. Whereas indirect wages refer to the wages of those people, those staff that are not directly involved in the manufacture of the product, such as supervisors' wages. The supervisors will supervise the whole production, not on a particular product, but all the products. Similarly, the salary of the manager, the rent of the premises, these are the common expenditure which are incurred on all the products produced in the factory. That is called indirect wages. These are the differences between direct wages and indirect wages. Now, secondly, it is asking you to calculate the prime cost. For calculating prime cost, we need material consumed, direct wages and direct expenses. But in our problem, direct expenses are not given, right? So we take raw material consumed, opening inventory of raw material 26,000 given in the first line, beginning of the year. Then add purchase of raw material 1,34,000 and carriage inward, carriage on material purchase is 1,000. The total comes to 1,61,000. From this we deduct the closing inventory of raw material. So 31,000 is the closing inventory of raw material. Subtract 31,000, 1,30,000 is the raw material consumed. To this we add direct wages 70,000. The total is 2 lakh prime cost. We are not taking indirect wages because indirect wages will be taken under manufacturing overhead to calculate production cost. If we are required to calculate production cost, we would have taken indirect wages under manufacturing overhead. But in the problem, it is not asking you to calculate production cost. It is asking you to calculate only prime cost. Similarly, work in progress. Opening and closing work in progress will be used to calculate production cost. So we are not taking WIP. Finished goods opening and closing, that will be taken in income statement. We are not making income statement. So ignore work in progress, ignore finished goods, stock of finished goods, and ignore the indirect wages. Only direct wages you should consider. That's it. Prime cost 2 lakh over. So problem number 12 completed. Now I am coming to the 13th problem. Red Limited manufactures footwear. It provided the following information for the year ended. So again, a manufacturer is there. Information is given. Inventory on 1st November 2013, beginning of the year, and 31st October 2014 is the end of the year. The beginning of the year, raw material, WIP, finished goods, all the three inventories. Then purchase of raw material, carriage on raw material. This carriage on raw material is the carriage inward. It will be added to purchase of raw material. Then direct factory wages, indirect factory wages. Direct factory wages will come under prime cost. Indirect factory wages will be considered under manufacturing overheads. Then factory machinery, cost and accumulated depreciation. This we require for calculating depreciation on machinery. That's a part of manufacturing overhead. Then factory power, heat and light, insurance, rent and rates. These are the expenses. Stock on 31st December 2014, end of the year, closing stock of raw material, WIP, finished goods. This is the complete information given for the year. Now additional information. On 31st October 2014, insurance paid in advance amounted to 500. Paid in advance, prepaid will be deducted. So how much insurance paid? On the top it is given insurance paid 1500. In that 1500, 500 are paid in advance. That is given. Deduct. So you can see in working note. Insurance 1500 minus paid in advance 500. So current year insurance is only 1000. Then and direct factory wages owing were 6400. Factory wages owing accrued payable is 6400. How much of direct wages already paid? It is 78,600. Already paid is 78,600 and payable is 6,400. So 6,400 should be added. Now you can see here. 78,600 paid and 6,400 outstanding, not paid, will be added. So total factory wages are 85,000. Next comes light and heat, insurance and rent and rates are to be apportioned 3/4 to the factory and 1/4 to the administration. Administration means it will go to income statement. But we are concerned only in making manufacturing account. So we take only factory. We will not consider the 1/4 to administration. What are the three items? Heat and light, insurance and rent and rates. So in working note you can see insurance. 1000 is the insurance, but 3/4 will be applied to factory. So factory 1000 into 3/4, 750 only will take. Similarly, heat and light. The heat and light given in the problem is 26,000. Again, 3/4 will be allocated to factory. It is given 3/4 of the heat and light to factory. So here I have shown 26,000 into 3/4, 19,500. So here I have taken 19,500. Last one is the rent and rates. The rent and rates paid is 8,000. So 8,000 rent and rates paid. 3/4, 6,000 should be applied to factory. 6,000. Next one, factory machinery is depreciated at the rate of 25% on reducing balance method. Depreciation to be provided on factory machinery is 25% on reducing balance method. So here I have shown the calculation. 25% on RBM. So first we calculate the carrying value. Carrying value is equal to cost of machinery minus accumulated depreciation. It is given in the problem the cost of machinery 3,50,000. Accumulated depreciation 2 lakhs. So subtract 2 lakh, 1,50,000 is the carrying value. On that 1,50,000, 25%. So 25% of 1,50,000 comes to 37,500. So this 37,500 is the depreciation of machinery. Now next page, prepare the machinery account for the year ended 31st October 2014. Now we will make the manufacturing account. So rate limited manufacturing account for the year ended, raw material consumed, opening inventory of raw material 45,000 given in the beginning itself. Opening inventory, add purchase of raw material 2,62,000, add up 3,07,000 plus carriage on purchases. The carriage on purchases are 9,000. Add up 9,000, carriage inward 9,000. Then total 3,16,000 minus closing inventory of raw material 51,000 given. Closing inventory. So we'll get material consumed 2,65,000. To material consumed we add direct factory wages. Direct factory wages are 78,600 paid. And last paragraph additional information it is given owing still to pay direct wages 6,400. So total factory wages are 85,000. Now you add up the material consumed and direct wages will get the prime cost 3,50,000. Now factory overhead or manufacturing overhead means same. So what are the items? Indirect factory wages 28,930 directly given in the problem, no adjustment. Then factory power 22,379 given in the problem, directly I have taken. Heat and light. Heat and light in working notes I have shown you here 19,500. Similarly insurance 750, I have shown the calculation in working note. Similarly rent and rate 6,000 I have given in the working note. And depreciation on machinery here I have calculated 37,500. Over all the factory overheads I have taken. Take the total of factory overhead 1,15,059. To this we add opening inventory of WIP and subtract closing inventory of WIP as usual. Every problem we are doing the same thing. So here opening inventory of WIP 13,650 add up and minus closing inventory of WIP 13,709 minus. So ultimately 1,15,000 is the factory overheads. Now you add up prime cost 3,50,000, factory overhead 1,15,000, 4,65,000 is the production cost. That's all. This is the end of manufacturing account for the year, right? Now next point, next paragraph, see the problem carefully. After preparation of the manufacturing account for the year ended 31st October 2014, an income statement was prepared. It showed that the profit for the year was 1,13,000. The statement of financial position showed that the capital employed on 1st November is 5,65,000 or 565,000. So, at the end of the year, already income statement prepared. We got the profit 1,13,000 and capital employed was 5,65,000. The return on capital employed has decreased from 28% for the year ended 31st October 2012 to 25% for the year ended 31st December 2013. Current year is 31st December 2014. See here, 31st October 2014. So here's cost return on capital employed ROCE is given for the year 2012, 2013. 2012 it is 28% and 2013 it is 25%. So from 28% it decreased to 25%. Now calculate the return on capital employed for the year. For the year ended 31st October 2014 using the capital employed figure on 1st November 2013 for your calculation. So we are required to calculate ROCE, return on capital employed, for the current year 2014. And 2014, what is the net profit? 1,13,000. And the capital employed we have to take for 1st November 2013, 5,65,000. The formula for return on capital employed is profit for the year divided by capital employed into 100. So here, return on capital employed, ROC, net profit by capital employed into 100. So net profit 1,13,000, capital employed 5,65,000 into 100, 20%. So actually 2012 ROCE was 28%. 2013 ROCE was 25%, and 2014 ROCE has 20%. So you can see last 3 years ROCE is declining, 28%, 25%, then 20%. Now what it is asking, evaluate the significance of this ratio for Red Limited and state with reasons whether you believe that the company is operating effectively, efficiently. No, sorry, the company is not operating efficiently because the ROCE is declining. The profit on capital employed is decreasing from 28% to 25%, from 25% to 20%. It shows that the business fails to generate enough profit on capital employed. In other words, the capital employed is not properly utilized. If this trend continues, that means every year ROCE declines further, then what will happen? The shareholders will lose the hope of the company. They will sell away the shares. When they sell away the shares, the company cannot be able to procure new funds. They cannot be able to convince the new investors to come and invest in the company. The company will find it difficult to raise further capital. So here the ratio indicates that their ROCE has declined over the 3-year period. So from this data, it is seen that the ROCE has declined. This indicates that the company is not operating as efficiently as it should be. The company's ROCE is declining. It shows inefficiency of the company to generate the profit, and that they are not making the most effective use of their capital employed. The company is unable to use the capital employed. If this trend continues, shareholders decide to sell their shares. If the situation continues, if ROCE goes on decreasing, the shareholders will lose the hope on the company. Then the shareholders will sell away the shares. The value of the company will come down. No new investors will come and invest in the company. That will be the consequence if ROCE declines every year. That's all. This is the end of problem number 13. So 2 problems in this video I have explained you, 12th and 13th. See here, if in the first attempt you are not able to understand, watch the video twice, thrice. If you repeatedly watch, then only you can be able to get the points. So inshallah, we will continue the next problem in the next video.